Hey guys, so we are going to be going over stop losses and take profits. So I can see here that I've got consolidation. I can quite clearly see that I've got consolidation. How can I see that? Because I know I've got multiple lows in this area here, and I know I have some highs in this area here. Now remember, we're not always looking for a perfect range. Right, we're not trying to fill out the range because we will be looking at order block lines, which will be on top, and order block lines, which are probably going to be down here near the bottom. That's what we are going to be looking at here. Now, it's definitely consolidation because we don't have any new highs and we don't have any new lows. From this original high to this next new low, from here, we get nothing. So let's say this is at 8 a.m., right after we formed the lowest point. It comes all the way up to this exact same high and comes all the way basically back down here. You could say, Alex, that's a lower high, but do we have a higher high? No. Remember, for a trending market, we need new lows and new highs. I don't care if you form a nice new low or a nice new high, right? I need a high and a low. This does not happen. Quite clearly, we are in the exact same area, right? That's exactly where we're at. Even if these wicks do go a little bit higher, that is not enough for me. What are we looking at here? 2, 3, 4 pips? It's not a new high, right? So then it comes straight back down to the exact same low that we've already looked at, to the exact same high. And now we're coming down to this order block line. So that's how we found consolidation. You will get better at this. And again, you can always schedule in lessons if you need to or have any help. Or join the free Discord where you can ask questions for free there. Now, what's going to happen from this area is, of course, if you watched the video beforehand, we're going to want that breakout to occur. We were going to want it to break through this order block line. And until that does, because you can see it respecting here, it's almost pushing it back in, we're not going to be hopping in. And you can see it literally pushes it straight back into that range. We test the order block line and we break through. Fantastic. But remember, we're waiting for that retest. Now this, of course, is a bit of a news event. It's a jump. You can see it comes out there. We're not hopping in. We still don't have that retest. Okay, where's it coming? What are we waiting for? Is it going to do it? Let's wait to hit that blue line. And there we go. Boom. Hits it, in fact, comes up and basically retests this line. It's perfect and immediately falls away. If I were to have a look at this one to see how much it is in length, is that not 20 pips? Yes, it is. So we can hop into this one straight away. So this is where my entry is going to be. Soon as I've got that there, where am I going to put my stop loss? Well, there are two places that you can go and do this. You can either put it just underneath the order block line or just on top, whichever way you're going for, whether it's buys or sells. Here, I'd put it just a few pips above. So if the order block line is here and I'm at 10, maybe I make it to 12 or 13. Just give it that extra little bit there to be safe. Now, if you do want to take the how should I put this? The more risk-averse approach, you can always bring it just above the range line, doing the exact same thing. If that's 16, I could move it to about 19 or 20. That's what I can do there. There's absolutely nothing wrong with that because you're just adding an extra layer of defense. If it does come up, maybe it would like to test this area before it goes down again, but I doubt it's going to come back up here. The order block or the amount of orders that's then pushed into here, as shown by this, should throw the market back down. So I'm going to leave it right here for now, and I'm going to aim for a 1 to 2. Now, a lot of people ask me, hey, Alex, why are you always going for 1 to 2s? Aren't you looking at lower lows? Aren't you looking at higher highs? Aren't you looking at FVGs or whatever in the market? Here's the truth of the matter. When you go and you backtest any strategy in existence, you are going to find your win rate. And when you know your win rate, you therefore know what you have to get as a minimum, in order to succeed in the market. With this, we're close to about 50 to 55% in the win rate, right? That's what I was looking at when I was hopping into the market. That's what the guys are still looking at. It hasn't changed since then or with anyone trading it. Yes, there are ways to improve on this. Yes, there are things that you can do and other little, indicators that you can pop on just to make this easier. But I'm not going to go into that at this current moment in time. I would love you guys to make this strategy your own, improve upon it, backtest it, turn it into something amazing. But here, I'm still giving you a strategy that actually works. So it doesn't matter what's happening over here to the left of me. This chart could be doing a loop-de-loop. It could be on fire, Anything could be happening. I don't care. I know that I need a 1 to 2. If I've got a 60% win ratio, I can go for less, right? That's what I can do, but I'm going for a 1 to 2 here. So with that in mind, let's see what happens. The market manages to drop down here, keeps on going, messes around for quite some time, and eventually we will get the move that we want. And you win. Let's move on to another example that happened recently. So I picked this one because it's just a little bit harder to see. In fact, you can see multiple areas of consolidation within this. And you can see the tried and true trusted method where you get fake outs and it comes back in. If you'd waited for those 20 pip moves, you would have taken a whole lot of time. Another area of consolidation would have built itself and you would have to start again. And that's what we're going to focus on in our exit rules and our disqualifiers. What we would do in order to not hop into a trade and what we would do if we are in a trade and we need to hop out of it. But from here, I can see a really, really nice slice of consolidation. Right? You can see a really, really nice slice of consolidation. It's the exact same thing. We've got multiple lows at this point here, and we've got multiple highs right here. I know, and you can already see what's happening. This is literally a trade that you could have entered as of recording, right? As of recording. We then have our order blocks somewhere up here, and our order blocks somewhere down here. How can I tell that this is consolidation? Well, we have our first high, and then we have a low down here. From here, we've already built the exact same high in here. You could even say this is a low. We don't get any new highs or any new lows. They all hang around the exact same area. And even if you did say it was from here, that's 4 p.m. there. We're well over 4 p.m. the next day. Still hasn't happened. And I realistically think you could look at this and say that's consolidation every single day of the week. So what happens again? Well, we've got our order block line. We break out from it. And then we should come down and we retest it. Perfect. This time it wasn't a deep retest. We did hit here, but we're waiting for those candlesticks. Here's the dual candlesticks that have happened here. Because remember, we're either waiting for 2 or we're waiting for 20 pips. And even if I did have a look at this from where the retest was all the way up to here, that's 27. It's well over what we need. So we can literally hop in right there. We could put our stop loss just underneath here if we give it a couple of pips. So you could do like 27 pips, somewhere around there. And we could be going for a 1 to 2 because that's what we need. Remember, guys, that's what we need. We will be targeting some highs, but we might as well go for it. And as we know, markets just mess around. And here we are at this current moment in time. We had the retest on this line. It did bounce up. Now we can retest into here. We will be talking in the next episode about maybe going a bit too far. But that's where we always put our stop losses and that's where we always put our take profits. In this case, you don't want to go too far down and actually give it a 39. That's too far. The maximum stop loss that you really want is about 30 pips. So if this actually did come to, instead of say 27, it was 37, and I needed to move it to here, 17, which would actually be 27, right? Doesn't make sense because my stop loss is in no man's land. It always needs to be behind this line. So just take that into consideration when you are trading. And that's my stop losses and take profits. Pretty easy to understand. I hope you guys have enjoyed this. And of course, in the next episode, I will be going over disqualifiers, why you should not get into the trade even though it looks good, and exit signals. When you are in the trade, what should we do? We can even go over this one when it eventually does either hit our stop loss or I take profits. And I'll see you in the next one, guys. Bye.